All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Let's get down to it. Let's go take a look at the challenge here. Let's fill in the pricing and see what we got to do. Intel here, 252 on the price. So let's fill that in here. We'll adjust Chevron and Under Armour. So 252 on Intel, here on Chevron. Down 50 cents here today. Dumb thing. What are we? 260. 260 there on Chevron. And then on Under Armour, we're looking at. Here we go. Yeah, down 10 cents. I grumble at these types of trades, but 231. So a penny different from what it was, yesterday. So here we are, 10,500. Down a couple $100 here on the day with, thanks to Chevron, I guess. They're down about 400 here on Chevron, and then just nothing going on with Under Armour, and Intel up just a little bit, but nothing really show stopping there with it. Now we do have Under Armour, which is coming up to its auto exit date. The options and ingredients auto exit date 7-Eleven, which is today in the afternoon session, and so most likely, barring a massive move higher on Under Armour up to 27.26, we're going to be backing out of the trade. The stock is trading higher from where we got in by about 1%. But a little time decay there on the option, and doesn't something we experience in each and every single trade there. But Chevron not at its exit target 123.74, has about $1 to go to get to that here. Intel not at its profit target, there has a ways to go to get there. About $1.50. So no real news. Chevron just kind of moving along with the energy sector. We saw the energy sector pretty much open up flat, and it's kind of faded. Here this morning, at least so far. You can see the XLE right here. And, whether you look at Exxon, whether you look at Chevron, Conoco, they're all doing about the same thing there, with it. And then if we look at Intel, this is one that, when we bought it yesterday, we were looking at almost a gravestone doji candle, then rallied a little bit into the close, kind of gapped up here this morning and ran, but there's something very interesting, and this doesn't affect the trade at all in terms of, any trade making decisions, but Intel has had a very strong pattern here of late. We could just look right back here to the end of June. Now, gap up and the first little bit runs, the rest of the day bleeds. Next day, gaps up, first half hour, move, rest of the day bleeds. Next day, gap up, right? First half hour, rest of the day bleed. Then we get gap down, right? Gap down, rest of the day, track on back. Gap on down, track on back. Gap on down, track on back. Yesterday was rally and fade, right? Today's rally and, do we see a fade? It is done something in the first half hour, and then, during the rest of the trading day, done something different. And, that won't last forever, right? That isn't, this isn't a key nature of Intel and, something to take and go, well, you know what, I'm just going to sell it every morning or buy it every morning if it dips. Not something of that not something I would look to do that with, but it's something, that we kind of just keep an eye on, kind of going on right here, in terms of what some of the, what we kind of expect there out of the stock. Okay, no new signals on the board here this morning. We have a couple that are close. J&J. Could trigger here today. The consolidation component's a little too high. This morning, I don't know if you saw it. I went to CNBC.com, and just curious about a couple things. And there was a headline, and it's no longer here, But there was a headline that said healthcare, set to jump, with U.S. President Trump basically eliminating some of the drug rebates, or health stocks soar, right? I think that was the word, health stocks soar. Okay, there's J&J, not exactly soaring. Here's the XLV, sitting here in the red. And, even though it gapped up this morning and, quote unquote soared, we're not talking about major game changing type of gaps or even types of stories here, with it. So, UNH, yes, it is a game changer for some of these insurers, like UNH, like CVS, but a little tough to chase those on that news, and none of those are here in the challenge watch list. And UNH, I like to trade UNH, but there's a very good reason why it's not in the challenge watch list. And that is because the data over the last several years suggests the triggers don't work. It simply doesn't work. To apply the 2 average true range method here to it, it just doesn't work. The data has come back, and it's, big negative here for UNH on the signals and the data. So, nothing to, not added there to the watch list for the challenge. Options, also aren't that great either, but a pretty good story here for UNH, and one that from a long-term standpoint is still extremely bullish, and still one that I would be very surprised if we don't see this stock trade up into the 320s, 340s, here sometime, fairly within this year. All right, so that's challenge. Those are some of the, things kind of coming out. J&J could be a trigger later today. Don't have the cash to make a trade right now, but if Under Armour, this afternoon, if we do have a trigger, we have to pull off Under Armour, we will have the cash to, be able to go after the next trigger. Okay. All right, that's all I'm going to share here with you this morning, except for one other thing that I promised to do, and that is, address Hindsight. And I'm only going to spend 3 minutes doing it, because I know some of you are like, yeah, we get it. But I promised I would kind of give my thoughts on it here this morning. I had a couple things come in about Disney, right? And Disney had a very nice day yesterday, having a very nice day today. We had a nice buy signal right here, and ultimately had to get out right here, Tuesday at the close of the market, or in the afternoon session. And I made a comment in that afternoon session that it probably goes higher. I really like the price action. The selling action was on extremely low volume, and made that comment it probably goes higher, but I sold the position, right? And I sold the position because it hit its time stop. And so the question came in, hey, Jeff, is there any way that we can look and for the challenge expand the time stops, for something like Disney? And, using kind of, see the option did this and blah, 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 using kind of the hindsight argument here with it, right? Sure, we could. Absolutely could. Could go out and expand those time stops. But I want to show you something that would have happened had we expanded the time stops, because we can look at one situation and, kind of make a decision based on one situation. But when we look at a basket of data, that tells us a lot more. But even here, just in this challenge, take a look at J&J. We got knocked out on the time stop right here. What happened that day, right? We got knocked out in the morning, and that day, what happened? Tank. The next day, tank. Right? Our option, clobbered. Absolutely dismantled here with that. Right? Boeing, we got knocked out on the time stop. Yeah, could we have held it through and all that? Sure. And then, so yes, Disney would have been really nice to hold. I really would love to still be in Disney. But when we look at the basket of data for over 600 trades, yes, there are some that hit their time stop and go the way that they signaled. But when we look at the entirety of the data, most of it, or the aggregate, is loss. The aggregate suggests that, hey, the odds are simply just not as good in our favor. So, yes, could I step in and say, yeah, I'm going to hold Disney? I could, but I'm not playing the odds that way. Right? And the challenge is about playing the odds and running with the odds. And yes, I do have the ability to step in and override something if I so desired. But I'll be honest with you. I probably would have overridden J&J and held J&J, right? And so you say, well, okay, fine. We take a loss there. We're holding Disney. But, had I overridden that J&J decision, at the beginning of the challenge, we're not up at the levels we are right now. So if we want to go play that hindsight game, there's a lot of different ways we can play it, but we have to look at all sides of it. Can't just look at the sides that would have worked in our favor. Have to look at the sides that would have gone against us as well, to dictate. Now, as I always say, I'm just showing you what I do, right? Or what I'm doing. And, you're more than welcome to make the decision you would like to make. You hear me say that enough, right? But that is, that's the reality there with it. But when it comes to the challenge, and, it's one of those where I mentioned at the beginning of the challenge, this format of a challenge is not for everybody, right? It's going to drive the hindsight traders nuts. It's going to drive the top pickers and bottom pickers nuts, right? It is something that will drive them nuts because we're not out to optimize every single trade. We're out to optimize the process, and we're out to optimize the challenge with the idea that it's an event, or it's a process, not an event. In each and every trade, let's face it, they're not game changers, right? They're not going to make or break the challenge. Right now, we're in Intel. Right? Intel is not going to make or break the challenge. What Intel does during the life cycle of its trade is not going to change the challenge in any real massive way. Even if it goes and hits its strikes and price targets, great. It'll put in a nice little gain. We'll take it and move on, but it won't affect the process. It won't affect, even in the long term, what happens with the next trades, right? If it goes against us, we get stopped out. Same thing, right? And we're going to have gains and losses. We got knocked out of CSX, and CSX took a loss, and the next day it popped. Did CSX change the challenge? Was it a game changer? No, in fact, there's no trade on this board that was an absolute game changer. Right? The GLD helped us to push into another little level. J&J would have been a game changer had we held it, but for the most part, no trades on the board are going to make or break the challenge. Now, I'll grant you, if this afternoon it's announced that Nike's going to go buy Under Armour and they're going to buy it for $60 a share, yeah, that would make the challenge, right? That would definitely make the challenge. If it's announced that Under Armour is going bankrupt today and Under Armour goes to zero, and we lose the $3,500 on Under Armour, would it sting? It would sure sting. But it's not going to, we're still dealing with gains. We're still in a position to strike and still in a position to, carry on forward. And that is a big part of, why the challenge has gone to this format, is to kind of just keep some of that anxiety, some of that emotion, some of that stress that, comes from the community that, different traders feel at different times, and basically be able to take that out of any of the decision-making processes and keep the decision-making processes consistent and effective, where the decision-making process isn't just consistent for the sake of consistency, but it's consistent for the sake of probabilities in our favor. I know I went over 3 minutes with that, but that's just my my 2 cents there with with kind of that the hindsight and that we could have and we should have or any of that. And yes, there's a ton of that, right? There's always going to be more of that. It's always going to exist in the market, and it's not going to be something that is that is where you can completely wipe it out, right? But with the challenge, We don't have to sit there with would have, could have, should have. We know what the decisions need to be at certain times based on the probabilities. We make those decisions and we run. And what happens with the trade afterwards? If it tanks, fine. We're not in. Great. If it keeps on rallying, fine. We're not in. Great. It doesn't change anything. Here for us. One last comment here on gold. I was asked about gold here this morning, and is something changed? Is it time to buy gold? And look, I'm not in gold right now. I'm very bullish on gold long term, but I'm not in it yet, and not looking to get in it yet. It's something where we talked about it right back here as needing what? As needing a consolidation. And we've had pop and we've had drop, and gold has gone nowhere. It's just simply gone nowhere. And until the pop and drop and consolidation is over, I'm not really interested in getting in. For as bullish as I am, for as much as I think, hey, if you're you have an IRA or something like that, very worth having gold in that IRA. But if you're trading it and you're just looking to, be on the next big move, right now, the chart favors more consolidation than pop or drop. So yeah, there's just nothing there for me yet when it comes to gold. And look, I'll be the first one to jump in and say, hey, you know what, I'm jumping in when I get in. But, yes, it's had a couple, good days. And, we talked about it on this day right here. And, it was, okay, everybody's bullish on gold. Well, not so fast. Hold on. And then gold sells off and everybody kind of backs off and then it pops. And, it's kind of trading like gold trades. And I personally would love to see, just some of these buyers that have been in this area just be forced out. I would love to see them just get forced out, just get taken to the cleaners here, see gold pull back, fill this gap, come into this 128 mark, which is the high from February, come back into this mark. This would be the retracement, and that's where I'd be very interested in buying it, even on a downtick. But for me to look at gold each and every day and go, well, it's up a little or down a little, so should I buy or sell it? Nah, that's not my game right now, and I don't think it's a very profitable game unless you're day trading. Day trading is a completely different animal, altogether. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.